Yo, 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 what up, fam? What's cracker Layton? Or whatever all these kids say these days. Anyway, welcome back to another episode of TA with MK. Of course, my name is still McKay. And in today's episode, we're just going to talk about two charts briefly that I think are good ones to keep an eye on as it relates to inflation and inflation numbers. And hopefully we can use these charts in correlation or combination or confluence with some other things, going forward to try to get an idea of maybe when stocks have found their bottom, right? Maybe when inflation has found its top and when things may begin to, slowly recover and turn around. Now, I want to give credit, obviously, for these two charts that I'm going to show to a YouTuber that I started following recently that I actually gave a shout out to in a recent video, and his name, the name of his channel is CryptoClick, and again, I'll leave a link in the description for his channel. But he had two charts that I'm going to share with you today on my channel, but I just wanted to give a shout out that that's where the idea for these charts and the reason I started tracking these charts came from him. Now, if you guys are liking the content, please remember to like and subscribe, and let's go. Now, the first chart that we're going to take a look at, the ticker for it is ZW1 exclamation point, and what it is the wheat futures by CBOT. Now, I'm going to explain real quick what they show online for Google of exactly what the wheat futures is. I put it here on the chart just to read to you. So it says, wheat futures, W, are exchange-traded commodities contracts on the Chicago Board of Trade, which is CBOT, and one of the most widely planted crops in the U.S. The primary use for wheat is flour, and wheat byproducts are also used in livestock feeds. So what does this mean? Well, just like Bitcoin has CME futures for people to basically trade the future price of what they believe Bitcoin will be at, in a future date, this is just the same thing, but for the crop known as wheat, right? And wheat, especially in the U.S. anyway, is one of our largest grown crops throughout the entire United States. Obviously, it says here one of its primary uses is for flour, which is obviously something that's used everywhere in the world and is a very important product. So the reason why I bring it up as something that's worth tracking as far as its chart goes is because as far as inflation goes, we have a few key factors, quite a few factors, but we have a few key factors that maybe could be clues for us as to when those numbers have peaked and potentially could start to come down, right? We know that as inflation's gone up, everything's gone up as far as prices. Obviously, the prices of gas or oil, and then food, of course, and many other things. But the reason why, I say wheat's a good one to watch is just as far as food's concerned, it could be a good indication, if it's going up or down as to, how inflation's doing, obviously. And so here we are on this chart. This is the 4-hour chart for wheat futures. And I don't know if this is a super valid pattern per se. It only really had one touch up here, one touch here, and then really just one, two touches down here. But essentially it was in this potential symmetrical triangle, right? Dating back to, early March. And so, like I said, you kind of had this top, you had this bottom, you had a lower high, but then, now you finally have a lower low. So regardless of whether this pattern was, valid or not, the key is that it's showing signs, at least, of having potentially found at least a local top. Doesn't mean it's going to be the top yet, but it could have found at least a local top. Because you go back here in early March, around March 8th, CME, or not CME, but wheat futures, or ZW1 in this case, was trading at 13,000, I think it's 1366, slash 2 or whatever however they show it on here. I think it's kind of how they do it. So we'll just say 1366, right? Well, right now, of course, it's come back down and it's trading back below 1,000, about 931. So that's a good sign, I would imagine, at this point. As we zoom out in a minute, you'll see that we are in an area of major support. So the question is, does it break that support and continue lower? I have a measured move listed here on the chart for the symmetrical triangle, but again, I don't know how valid that pattern is. The biggest thing to me is if we do push back up here, if it does find support on this area that we're about to zoom out and show you, well, if it comes back up here, can at least put in a lower high, than this high up here, and then potentially, because this whole little drive here was, actually, if you go back to what Bitcoin's been doing since, mid-May or so. Obviously, Bitcoin has come down with this. So we're over here on the Bitcoin 4-hour chart, and you can see here around May 17th, Bitcoin was just trading sideways between around 29,000, right? Obviously, this ended up being just a redistribution, but it more or less was just chopping sideways. Had a few little pumps to the upside to try to break these 200 moving averages on the 4-hour, but obviously ultimately got rejected. Here it was able to get above the 200 simple, but ultimately got rejected. So anyway, it's not to say that just every time this comes down that we're going to see Bitcoin go up. No. But I think this, in correlation with a few other things, and especially this next chart that we're going to go over, I think it can just be an indicator, at least, that maybe inflation is getting a little more under control, and some of the prices of, in this case, food may, start to come down. And as that comes down, obviously that would be a good thing for, just inflation overall. Now, real quick before we move on to the next chart, I just want to also show you a zoomed out weekly macro view of kind of wheat futures, or the price of wheat. Now, one key thing to take note of is if you look back here, this would have been around March of 2008. You can see that the price of wheat for futures was trading at around, 1350, so 1350. And we recently just peaked our head above that, but we hit that same price literally just March again of this year, right? Well, what happened back in March of what was happening, in the world, I guess you could say, or at least in the United States, back in 2008? Well, between 2007 and 2009, as we know, that was the last major recession, which a lot of people have said we're basically in the midst of right now. But on the positive side, or some hopium, is that it did find resistance at that same area, and clearly the price of wheat following that over the years, between 2008, 9, and ultimately 2010, it came back down and found its bottom, right? And that ended up being essentially where now, recently, we've double bottomed, bottom, which was the catalyst for this. So the question going forward is, you could see I have this blue and orange lines. These are weekly and daily support. You can clearly see that the bottom, here is resistance, the blue here resistance, orange here resistance. So the question is that's a major area, obviously, in this case now, that could be potentially support. So the question just to me is this going to bounce, potentially head back up here, ultimately hopefully putting in a lower high. But I would imagine any sort of major bounce out of the price of wheat would be bad for inflation numbers and, overall just the economy, right? On the flip side of that, at some point, if we could lose this support here and retest it bearishly and come back down this way, towards our measured move or our next major zone of support, obviously I think that would represent be good overall for stocks and, inflation in the economy, right? So obviously no predictions to be made as far as this is concerned, just something I'm going to be tracking. If we were looking at it just purely from TA and, statistical standpoint, you would imagine that at least the first go around, even if it was going to continue lower, that it would bounce, because this is clearly a very major level that, back in 2011, it found resistance, ultimately it pumped back up, was able to get a little higher, in around July, August, of 2012. And then, it stayed below that clear until, it finally broke out in late February of this year, right? Just a few months back. So I would imagine that, it should flip this area as support. Question is, will it flip it as support permanently, or not permanently, but at least for the midterm? In which case, I think the, overall inflation and stuff, it just means that we haven't peaked yet, in my opinion. Now, if we can come up and put a lower high in, even if it does pump up again, but then come back down and break, I think that over time, this could be, when this breaks and retests bearishly, I think that's kind of one of our first signs as far as food's concerned, at least, that would be positive to me as far as the economy, and, potentially could be somewhere we could look to be the bottom, at least midterm for stocks. Now, I got a little long-winded on that last chart, so I'll try to be a little briefer on this last one that I'm going to show you, or the second chart for today. And this is the ticker for this one is US Oil, USOIL. And what it is it's just one of the charts that you can use to kind of track what the price of oil is trading for. This is a zoomed out weekly chart. Shows right now it's at 109.63. And it's just another chart that I'm trying to use in confluence with wheat and a few other things going forward to try to get an idea of maybe when inflation has peaked. Now, just a simple Google search over here of what is oil used for. It says we use petroleum products to propel vehicles, to heat buildings, and to produce electricity. In the industrial sector, the petrochemical industry uses petroleum as a raw material, a feedstock, to make products such as plastics, polyurethane, solvents, and hundreds of other intermediate and end user goods. Wow, right? So clearly it's used for a shiz ton of things. Now, we already knew that, but I just thought it'd be kind of cool to read that to you. So maybe if you didn't know exactly all of it was used for, that paints a little bit better picture, right, as to the importance of oil. Now, clearly, as the price continues to go up, that just has a direct effect on almost the price of everything, right? Because the majority of businesses, receive their materials, their products, via transportation of some sort, whether it's via, a plane or it's a vehicle, cars, trucks, semis, so on and so forth, right? And so if the price of that continues to go up, well, then that just means it costs more for the businesses to get their products that they then sell to you. So then they just up the price to make up for that, right? And then you feel that, impact on your wallet, on your checkbook or whatever. So basically, what I'm thinking is if we can look at this chart and see it potentially find a midterm top. I don't know that it'd be a macro top for sure, but if it could at least find a midterm top, that could be a good sign for inflation numbers, right? Because as the price of oil comes down, then the reverse of what I just described would happen. Clearly, businesses would then be paying less to receive their product, and eventually, over time, they would pass that along to the consumer, which is us, right? And the prices of things would begin to come down, and therefore, inflation would have peaked. So, if we zoom out a little bit more, we can see that the top for oil was actually back here in 2008, obviously during the same time as when wheat peaked. It was our last major recession, right? And it was trading at nearly 150, just under 150. Peaked out here, it looks like at around 147 almost-ish, right, we'll say. So the question is, though, that there's this area it's at now that between 2011 and basically 14 acted as resistance on 1, 2, 3, and ultimately 4 occasions, as it was in this big symmetrical, not symmetrical triangle, but ascending triangle, which ultimately broke to the downside, which was, good as far as the price of oil goes and how much we were paying. And, it's been down below that ever since. Well, the question is it going to flip that area as support? That's what we'll be watching over the coming weeks to months. Does it, even if it pushes up higher, can it put in a lower high and eventually break to the downside of this triangle and start trending this way? Because I think that at that point, you'll see a huge difference, obviously, in just the confidence in the markets and things like that, because inflation will at least have shown some midterm signs of peaking. On the flip side of that, I guess, the bad side, that was the hopium side. The negative, side would be, hey, does it break out of this triangle at some point, retest it, and start trending back up here to retest its previous all-time high at just under 150. So that's what we'll be watching for on U.S. oil. Hopefully you found that somewhat interesting and we did not lull you to sleep. Those are just 2 charts I want to be tracking on the channel going forward. I may briefly mention them in future episodes just to kind of see what direct correlation they have as they go up or down, as far as what regular stocks do and how they react to the price of wheat and oil going up or down, and of course Bitcoin. So it's something I'm going to dive deeper as well in, and I'll make it a follow-up episode here in the next few days where I can look back and see, hey, was there times in the past that we were able to see exactly when potentially stocks or Bitcoin found their respective bottoms based off these charts? And we'll see if we can use that to help us potentially find, the same thing in the near future, potentially, right? And I just said the word potentially a lot in a very short period of time. So sorry about that. If you guys are liking the content, as always, please remember to like and subscribe. We'll catch you tomorrow. It's T-A